You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster Giovinazzi from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means it is time once again to commence our broadcast week here on the Options Insider Radio Network, what the cool kids are calling the OIRN. Of course, we'd like to kick it off with episode 1 of your bi-weekly options extravaganza, known as the Option Block, what the cool kids call the OB. Of course, I will be your host, your guide, your maitre d', leading you to your table for many of these episodes throughout your week-long journey here with us on the network. Reminding you, if you like what you hear at this show, anything else we do on the network, crypto, the interviews, all the education, the TWIFO, the vol views, you name it, Visor's Option, a whole bunch more floating around out there. Keep rating and reviewing. Really does help the legion of new folks discover the content that we are doing these days. They are legion, and they have questions, and they want to learn, and they need to be pointed in the right direction. So help do that. Keep rating and reviewing. Really does help those folks, and it helps them find a way to our door here as well. And, you know, we decided a while ago, it's a fun way to kick off our broadcast week here. Get the blood pumping a little bit with guessing some 80s show themes. So that's been fun. We've been doing a lot of that. We've added a few wrinkles to it since then. We added 80s movies to that. And then, by personal request of none other than Uncle Mike himself, we added a new wrinkle to the game last week, in which we added 80s wrestler entrance music to this. And I gave him what I thought was the slam dunk of all slam dunks to start it off. I gave him my personal favorite, the Ultimate Warrior, the guy who was on my wall as a kid. And he completely whiffed it. On top of that, he challenged it. He had the temerity to challenge it and say it wasn't Ultimate Warrior. He has since learned from the error of his ways. And so I thought, being generous fellow that I am, I thought we would shy away from wrestling, give him a chance to bone up. But he said no. To his credit, he is willing to get back on the horse and try again. So we're going to do another one this week, a little easier. Let's see if we can get this one as our 80s Guess That Wrestler's Entrance Music contest continues.
Walking disaster, pain and destruction is on in the name.
All right, I can listen to that for hours. Let's see if Uncle Mike got that. Of course, Uncle Mike TOSAW from St. Charles Wealth Management. A, welcome back to the show. B, a little bit easier this week because if you listen closely, they actually say the name of this tag team in the music. So, Uncle Mike, welcome back, A. And B, can you name that 80s wrestler's music, sir?
You know what? If I wouldn't have embarrassed myself so bad last week, I would have been insulted by this one. But because I embarrassed myself so much last week, I can't be insulted. So these guys were a pathetic knockoff of the real greatest tag team of all time, the Road Warriors. So the theme song was the Demolition, Axe and Smash.
Oh, I'm sorry. Did I accidentally just hang up on you for besmirching the greatest tag team of all time? Did I do that? How careless of me, sir.
So they had a third guy.
It was a total ripoff of the Road Warriors.
And it was,
are you kidding?
So the Road Warriors were by far the greatest tag team of all time. Animal passed away recently. God rest his soul. Hawk passed away quite a while ago. But, I just, like I said, if I wouldn't have embarrassed myself so much last week, then I would have been insulted by this. But I got to say, the Road Warriors were by far. There's the Road Warriors and there's everybody else.
Are you sure you're not thinking of the Powers of Pain? They were kind of, the Powers of Pain were kind of like.
You got the Powers of Pain.
And they fought Demolition all the time.
Express.
But I will not on this network hear any besmirching of Demolition. By the way, I'll give some. You got that right, by the way. So well done. You have redeemed yourself. I should give a shout out here to Hybrid Duo, also a Demolition fan. He wrote in to say the Ultimate Warrior was a tough one for Uncle Mike because his music is such a jumbled mess. I was going to guess Demolition, but it didn't mention Here Comes the Axe, Here Comes the Smash, which is of course in the Demolition music. He also said the genius Lanny Poffo had a more that's of course Macho Man had a more memorable. So he suggested Demolition. So two fans here for Demolition. So yes, you got Demolition right. They had a third member, Crush. We do not speak of him. That is not canon Demolition to all the Demolition fans out there. So there you go. Uncle Mike back in at least some semblance of respectability, even though I think his besmirching of Demolition may actually have to knock him down. We also heard the tinny voice of the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com by way of Carmen Line Capital. A, did you manage to guess that very easy one as well? And B, welcome back to the show, sir.
Yeah, no, I had that one right away. Although I think we can all agree that Demolition was at their best when they had Crush as a member.
That is not canon Demolition. We do not speak of Crush here on this network.
And yeah, I agree. The Road Warriors are probably the best tag team. Demolition was a good team. There were no Bushwhackers. There were no Midnight Express. I'm a big fan of the Powers of Pain.
Bushwhackers.
That was one of my favorites. And of course, the greatest tag team to never win a title is hands down the Rockers, which was I think a pretty darn good.
Where is Marty Jannetty these days? No one knows.
Yeah, no, Marty Jannetty. Yeah. Wow. He talk about, splitting up careers. But yeah, no, that is definitely one that I knew. I was a big fan of Demolition back in the day when WWF was on Saturday morning, and you'd see them just like pound on like two like chubby nobodies.
Yeah, Bob from Iowa, Jim from Kansas against Demolition. Right?
Yeah, and then the other one of their better feuds was actually with Hercules and Paul Roma when they were a team. I like that them as a team. And then, I would argue that the Dudley Boy more recently, I really like the Dudley Boys. And
I respect the Dudley Boys. Dudley Boys are legit. I'll give you props on them.
Yeah, I like the Dudley Boys. And then, what's the other team that I really liked? The Dudley Boys were a good team. But I think we can all agree that, it goes Bushwhackers and then everybody else.
Bushwhackers were kind of like two hacksaws put together. They just come out and go ho and march around the ring all day. By the way, childhood traumatic moment for me, listeners, before we roll on with our 80s wrestling cast, which we clearly could do a whole show about easily here on the network. I was introduced to Pathos. I was introduced to Tragedy and Sorrow. Royal Rumble, I forgot what year it was. I'm watching it with my friends. We get a pay-per-view, big deal. First person comes out of the Royal Rumble. They play Demolition's music. I'm like, all right, here we go. Demolition. Here comes Axe. I'm excited. I'm in. They got me, right? They got my first guy on my tag team. Second guy comes out. They play Demolition's music again. Smash comes out. Axe and Smash have to fight each other 1 and 2 in the Royal Rumble. Devastated me as a child. I'm not sure if I still recovered from that. As we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right. Mr. Meatball, he jokingly suggested a footballtility show on the Vol Views last week, but clearly some sort of 80s wrestling cast must be in our offing as well here. As we keep on rolling. Of course, welcome to the trading block. If you don't like 80s wrestling, A, I feel sorry for you. It was the greatest era of wrestling ever. B, we're going to kick it off now with the old trading block. Coming into the show today, we had mostly green on the screen yet again. One of these kind of weird bifurcated days again where the Dow and S&P are both feeling their oats. NASDAQ kind of dragged down by an albatross or two around its neck. Dow leading the charge to the upside. A bit of a weird day for that, up over 0.75% right now. S&P up about 1/3%. And NASDAQ 1/3% in the wrong direction. That means coming into showtime, we had VIX cash at about an 18.5. That puts it up about 0.75 point from last show. So a little bit, we were obviously in the 17 handle on our Thursday show. VVIX right again about 108. That puts it up about a point from where it was on our last show. And our old friend VXX continuing the gift of erosion back down to the dark side down. Right around 39 handle kicking off the show. Puts it down, a little bit over 0.75 point from where it was last show. Of course, it had its reverse split not too long ago, back up to the 40 handle. It eroded pretty aggressively, got down to close to 38 handle, then bounced a bit again. We saw that vol bounce, and now giving some of that back up. We'll see if that continues. And vol Q come into showtime. Once again, that at-the-money NASDAQ vol likes to stay glued around the 20 handle, because that's pretty much where it is again right now. Now, let's go back out to Uncle Mike. I may have partially, I don't think I have forgiven him yet for his besmirching of Demolition. But that aside, Uncle Mike, you did earn yourself a place, even if I did give you the gimme of all gimmies with a song that says the name in it. But what are you keeping an eye on? What's catching your eye in today's market, sir?
True story. This did keep me up at night a few nights this last week for the Ultimate Warrior. I guess just hearing the music, it wasn't loud enough from what I remember it back in the day. I think that's what screwed me up. But
we were lacking the pyro. That's what it was. Without the pyro, it lacks the true effect.
It didn't have the same effect, because I do remember when the Warrior came in, it would make my hair stand on end as well. He wasn't my favorite, but he was definitely up on my list. That's for sure. I had a lot of respect for the Ultimate Warrior. But anyway, in terms of the markets today, we're hovering around the 4,200 mark for the S&P. So we're getting up to levels with which we're not quite at all-time highs like we were for a little bit last week, but we're getting close again. We have not had a lot of bulls in command since the open of the cash markets today, in that we opened probably about 8 or 9 points higher than where we're at right now. Most of what we're seeing today came from an overnight gap up. So apparently the markets liked something that they saw over the weekend. I think they were saying like German manufacturing numbers, I think were one thing that I was reading. But it could have just been from the standpoint that Friday was a little bit of a profit-taking sell-off. And today people want to get back in. But in reality, we've been rather sideways today. We were down a little bit, but we've been kind of hovering around the levels with which we're at right now. So not a lot of action right now. And the market's still kind of waiting to show its hand. The other thing to mention is that this is the first trading day of May. So we can let the debate begin of sell in May and go away. Or is that something that we need to be concerned with? Or is that something that is really a thing? There's a lot of evidence that say it is, but nonetheless, it is the first trading day of May, so just make sure that you are aware of that as you're trading. The thing that's really lighting up my tape today is that we have an uptick in silver. SLV is up almost 4% on the day. SLV is up 96 cents on the day, and so we are getting a lot of movement from that area. So of the things with which I'm watching, that's the thing that's really lighting things up quite a bit. The other thing that I like to mention a lot of times on the show is that when we have we don't quite have the triumvirate, if you will, meaning that whenever you see all the asset classes moving in the same direction, something usually has got to give the next day. So in other words, stocks, bonds, commodities, if they're all racing to the upside, then the money has to be coming from somewhere, and the money usually goes back to where it's coming from the next day a lot of times. So what I mean by that is that we don't quite have it today, and that we do have the S&P up roughly a little over 1/3%. NASDAQ's actually down not quite 0.5%, but it's down about 0.4%, 0.5%, just depending on when you're looking at on your real-time quotes. We have a little bit of a small rally in the 10-year, not the yield, but the 10-year itself. And so we don't quite have the triumvirate, if you will, of things going higher. But if we do get a rally in the NASDAQ later today and the rest of these levels hold to where we are, could be interesting tomorrow. Now, the other thing to point out, XLE, the energy stocks, those are up over 2.5% on the day. And so bottom line of what I'm looking at right now for the week is that I have a pretty decent amount of deltas on the table right now in my aggressive strategy. And if we can break new all-time highs again with the S&P 500, then we could have another leg up to this rally. The market is doing one of two things right now. It's either consolidating, meaning it's just kind of taking its breath, so to speak, and getting ready for another leg up, or it's topping and it's going to be coming down. But I don't see this sideways action happening for much longer the next week or two. So that is what's lighting up my tape today.
All right, let's also head on out too deep in the heart of Texas when they're not busy eating brisket or chili or Tex-Mex. He's looking at some options things out there. Mr. Meatball, what options things are lighting up your tape today, sir?
Yeah, I think the big concern for me is that we really are seeing the VIX stopping dropping. So the VIX has now held between 17 and 19 since April expiration, which is more than 2 weeks from away. It's been stronger while the S&P is actually up over that period of time. That starts to make my ears, start to wiggle a little bit. The other thing that's really fascinating is, and I know that we don't normally talk ag, but the ag space is going bananas. Corn, soybean, lumber, wheat, pork, beef, they're just jumping through the roof right now, as there appear to be supply chain issues all over the food industry right now. And so that's kind of got me looking at, Archer Daniels Midland, Tyson Chicken, JB Hunt, some of the rails, because rails are going through the roof. Rail rates are off the charts. And then I'm, the NASDAQ looks soft. It looks sick a little bit here. We're noticing that NASDAQ skew is starting to get bid. The quickest way to look at NASDAQ skew is simply subtract vol Q from VXN, and you get a very good idea of what skew looks like. And skew is going up and up and up, which tells me that people are getting a little nervous about the Qs, which is polluting into the VIX, because at this point, the Qs and the S&P are becoming more and more the same index. So a lot on my screen has me agreeing with Mike that, we've been in some chop, and I wonder when we break out, are we going to see, a couple of days of real selling and then maybe see some buying? Because, the market looks like it wants a, call it a, 5%, 8% drop, somewhere south of 4,100 sometime soon. So I'm just on the lookout for, potential 20 touch in VIX and maybe some weakness in the S&P and certainly in the NASDAQ. Meanwhile, some of the names like XLE that Mike loves, I still like. I think they go up. And the ag space, like I said, is off to the races.
Yeah, ags have been lighting it up. You can just witness how many times we've talked about ags just in the last couple of weeks there on TWIFO, where previous to that, I could count on probably one hand the number of times an ag broke into our movers and shakers report to the top 5 or to the bottom 5 in either direction for much of this year. Not many times, listeners. And the last few weeks has kind of been all ags all the time in one direction or the other out there. So check out TWIFO if you are indeed intrigued by things like the beans and corn and wheat and what's going on from a skew and a vol perspective out there and all sorts of other fun stuff. Brooke, even some more esoteric products last week like soybean oil. Don't get a chance to get into those very often. Got into those on the show last week. So check out TWIFO This Week in Futures Options if you are not doing so already, listeners. One of the reasons why I tell you, if you're not subscribed to the full network, you're missing out on a whole bunch of fun stuff. Who else is out there talking about futures options in the ags? Very few people. So if you're interested in all things futures options, TWIFO, kind of one of the few games in town. Like one of our shows coming up later today, the Crypto Rundown. One of the only games, if not the only one, is talking about crypto derivatives out there. So dive in if you like this stuff on all sorts of other underlyings out there. Let's see what's going on right now from a broad market perspective. So far, again, this kind of mixed day, not generating a ton of paper in all directions. In some directions it is. Not in VIX land. Right now, only 139,000 contracts on the tape out there in VIX land. That's pretty light. The ADV still a tick under 500,000 right now, 496,000. Doesn't seem like we're going to get there today unless things really start heating up out there. SPY at about 2.3 million. That's a little bit north of half of its ADV. Its ADV is 4.1, almost 4.2 million out there. So SPY seems like it's on its way to a decently active day. The S at 703,000 contracts. The ADV right around 1.2 million. Some kind of locked at that level for a while as well. The Q, 601,000. The ADV had dipped ever so briefly below a million. Now it's back up to pretty much exactly a million again as we're seeing the NASDAQ continue to whipsaw all over the place. Small caps having a kind of quiet day out there. Only 184,000 contracts on the tape. The ADV just a tick under 500,000 out there as well. In fact, the ADV for IWM and for VIX are pretty much equidistant out there right now. So interesting stuff to watch. Small caps have been lighting it up of late today, at least from a volume perspective, taking a bit of a break out there. Let's see what's lighting it up from a single name perspective. Overall, it's a decently active day, but not blowing the doors off. Only cost you 183,000 contracts to break into the top 10 today. That gets you to Ford, one of our old friends, sleepy old Ford, back in the top 10 after having an aggressive sell-off last week. Remember, not too long ago, listeners, they had broken through the 13 handle. They were around 13.5, 1360, I believe. And then they sold off pretty hard coming out of earnings. Even though their numbers were good, the chip shortage really seemed to smack them in the teeth there. They got down. They were threatening to break the 11 handle. Rock Lobster was talking about selling 11 puts here on the show. I do believe he got distracted, never got a chance to get those off. It has rebounded since then, right around 11.5 right now. So not so much on the 11 puts right now, but 11.5 strike looking active out there if you are so inclined. And good for 183,000 contracts on the tape right now for sleepy old Ford. Number 9, Facebook, 203,000 contracts. Seems like mostly names you've heard of here in the top 10 here. Number 8, Pfizer. Wonder why they could possibly be doing some numbers, but they are today. 223,000 contracts. Good for number 8. Number 7, back to Palantir. Usually they're number 3 or 4. Today, only number 7, 266,000 contracts. Still, a day that ends in Y. Palantir is up there in the top 10. It really has, since its earnings last cycle, it really has captured just like a lot of options traders' imagination out there. They're hard pressed to think of a day recently that it hasn't been in our top 10. Number 6, Amazon. Amazon back in the top 10 there again for 269,000 contracts. Number 5, Neo. Again, now a perennial top 10er, 330,000 contracts for them. Number 4, Twitter. Coming back in after they kind of warned last week about maybe user growth not going to be as robust as perhaps it has been during the height of the pandemic. Let's see what's going on from a stock perspective right now. 54 and change, off about $1.10, nearly 2% on the day. But it's good for 375,000 contracts on our number 4 spot on our top 10 most actives here. Number 3, AMD. Again, it's kind of the little/big engine that could out there. It continues to fight its way into the top 10 every day, regardless of whether there's news or not. Today, all the way up at number 3, 474,000 contracts. Number 2, you know what it is. It's Tesla. Triple double here, 555 on the tape for number 2. And number 1 with a pretty small billet for their, at least compared to their recent averages out there. Apple, 768,000 contracts. You know, usually around this time of day, Apple is at or close to 1 million contracts. So kind of a light day. kind of reflecting what we're seeing overall in the top 10, not the most rock'em sock'em robots of days out here. Let's see what's going on from a biased paper perspective. Let's see who's really loving some calls, because again, it is calls. Looks like it's Ford listeners. 79% of that 183,000 is on the call side, followed by Palantir, number 2, 77% on the call side, and then Neo, number 3, 75% on the call side. Apple also looking pretty call heavy as well. 70% of that Apple flow come on the call side. Tesla, one of the few kind of more egalitarian names in the top 10, only 57% of the love for calls. So some folks slinging some puts. Remember, listen to our show from last week. We broke down the results of our poll there, and a lot of you got lured in by I think it was the June 1000 calls. And no, it wasn't. It was the June of 2022 $1 puts that are the big open position out there in Tesla right now. Let's look and see what's going on from an overall earnings perspective. You guys know where to go to get the results, the season, the move reports, all that good stuff, and a whole bunch more from our friends over there at ORAT's theoptionsinsider.com. Click on the Options News and Articles tab, and you're off to the races. Today we got Chegg, everyone's favorite name popping off. Chegg. Tomorrow we got Pfizer. Lighting it up, CVS as well. Under Armour, Activision Blizzard going out to the gaming realm. T-Mobile, Lyft, and Match. And then we got Wednesday, we got GM, Hilton, Uber, and Marathon Oil. Thursday, we got Moderna, so still more vaccine-related announcements to come. Viacom, Square, Roku, Peloton. Let's see what's going on with them. They got transformed overnight into a somewhat pricey luxury into kind of the only gym in the country. So that really saved their bacon. Let's see what the outlook is for them going forward. AMC and Beyond Meat on Thursday as well. Friday, DraftKings, one of the big players in that. Maybe the forthcoming sponsor of our football utility show. We shall find out. If you want some earnings move and earnings move results reports, we got new ones in your hot little hands, hot off the presses right now, right before showtime over there at theoptionsinsider.com. Get while the getting is good. We got some names popping off today as well. We got PetMed, everyone's favorite, ticker symbol PETS. Let's pull them up really quickly and see. Yeah, PetMed Express. They were popping off this morning before the bell. They were at 29.5 going into their announcement. They were pricing in, get this, listeners, 9.1%. So they were looking rich. They delivered a paltry 1.8%. Wow. So the vol annihilation continues out there. Oof. I'm sure, Matt went out on a limb and said this was going to be the season. He seems like he's already been backing that off a little bit, and it's results like this that may make him back off a little bit further. Let's see. We've also got Estee Lauder here coming in. They were popping off before the bell today as well. Let's see. They were pricing in. They were at $313.80 going into their announcement. They were pricing in 4.5%. No, it looks like a little bit of outperformance, delivering 7.5% to the dark side instead. So I guess Estee Lauder capable of outperforming a bit from earnings vol. They're selling off even more now, down about 8.5%. So a little bit of outperformance on the earnings vol front, but yeah, that pet one, that's going to hurt you. So far, listeners, we're still on the outperformance tip for the whole season, averaging right now a pretty anemic 64%. So if you look at that whole earnings as a basket that you purchased, 100% means you got $1 worth of bang for your buck. You're getting 64 cents back on your buck right now in terms of movement delivered versus what was priced in. So once again, listeners, looks like a blood red season, but it's still early. It's still early, listeners. Let's see what else we've got popping off after everyone's favorite Chegg after the bell today. 90.33 is where they are right now as of this report. They're pricing in 9.14. They're pricing in 7.72. In the past, they've moved 9.14. So they've gotten the memo out there in Chegg. Let's see. CVS tomorrow, 76.5 is where their stock was. They were pricing in $2.50. In the past, they've moved 3.33. So seems like they've gotten the memo out in CVS as well. Pfizer on the 4th as well, 38.81. They were pricing in $1.32. In the past, they've moved to $1.07. You could probably argue it's maybe merited, though, to have a little bit of extra juice in Pfizer these days. Under Armour on the 4th as well, 1977. That's where they were trading as of this report. They were pricing in $1.77. In the past, moved to $1.92. So, again, the past is prologue here in the earnings cycle until it isn't. So, folks are going to keep squeezing this vol. Let's go out to Activision Blizzard out there, 91.25. they were pricing in $4.66. In the past, they've moved $4.46. That's interesting. A little bit extra juice. I know they've had some developments in that name of late that maybe weren't the best. So perhaps that's contributing to some of that vol. Let's go out to Lyft as well. They're on the 4th after the bell as well. 63 and about a half is where their stock was as of this report. They were pricing in $4.42. In the past, they've moved $4.98, nearly $5. So once again, you can only slap people in the face so many times, listeners, before they start to look away. They start to protect themselves. And in that case, it's maybe lowering their earnings vol. You can only slam people for a year before they start realizing maybe we got to squeeze some of this vol out. That seems like what's happening out here today. Let's go to GM really quickly as well. They're popping off on the 5th before the bell. 58 and a half is where their stock was. They were pricing in. Oh, this is interesting. $2.78. In the past, they've moved to $1.81. So rich out there in GM right now. Of course, we saw what happened with Ford. Maybe some of that contributing to a little bit of premium out there in GM. We'll have to wait and see. Oh, I lied. We'll do one more. Let's go to Uber. Uber on the 5th after the bell. 58.44 is where they were as of this report. They were pricing in $3.97. In the past, they moved $4.01. So keeping things about in line with the past, which is kind of interesting. Not what I expected. So will this pay off? Will all this vol squeezing be the right play this cycle? Or will this be the cycle that finally turns things around? We shall find out. But not right now, because now it's time to keep on rolling right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, let's do it. Let's get to it. Hot off the presses here, our Eye of Sauron going out, scanning all the time, pulling back. Now, I haven't even looked at these. Let's look at them together, see what our Eye of Sauron found, listeners. First off, I do believe this is a newcomer, or at the very least, we haven't talked about this one in a long time. This is Banco Bradesco. This is a financial services company out of Brazil. This is an ADR, clearly ticker symbol BBD. Trading right now, $4.48, up about 12 cents or so, nearly 3%. Let's see, a year ago, this thing was trading at $3. Then it sold off down to about $2.68. Then it rallied pretty hard. You know what day it rallied. Listen, you don't even have to have me tell you. It was June 8th, of course. $4.36. That was its near-term apex. Then it sold off again to about 3.5. Then it did this dance a few times. Rallied again to $4.15, July 28th. Sold off hard again by September 29th. Was trading about $3 again. And then it rallied hard again. By December 16th, was trading $4.90. And then it got up to, looks like as high, right around that time, of about $5.46 intraday. And then that was, looks like a kind of about it, because it gave up the ghost, sold off to $3.61 again by March 1st. Then it tried to rally again up to about $4.36, gave it up a little bit again, rallied again recently up to $4.55, sold off again. So we've done this dance here a few times, listeners. Rally, get some good head of steam behind it, then it gives up the ghost. Let's see what our Eye of Sauron found out here. Maybe it will inform us here. Looks like we found a 7,500 lot of some little bit longer term puts. At the money puts. These are the Jan 2022 4.5 puts going up for 69 cents. The market was actually a comparatively decent 50 cents at 70, given some of these names you talked about last week where the market was no bid at $10. That's the market maker's code for go away. We don't want to trade with you. This was a comparatively tight 20-cent wide market here. So 50 cents at 70. Someone looks like they gobbled up 7,500 of these bad boys for about 70 cents, 69 cents, right off the offer there. Let's see. This was crossed, looks like over there on the box. Worth noting, this name is going ex-div here, but that shouldn't be playing into these longer-term Jan puts if they are. If they're trying to do a div play with Jan puts, they're doing it wrong. But let's see here. So, yeah, almost 70 cents for about 7,500. Mr. Meatball, I guess you can probably see an argument for this one because it seems like every time they make a near-term high, they immediately follow it with a low. This guy, I guess he's decided he's kind of tired of that. He wants to hedge himself out right here where we are right now at the 4.5 strike. And for that, he's willing to pay about 70 cents. So he stops himself out around 381. What are your thoughts on, I mean, it's kind of a rich vol, about 46%, but this name has been moving. What are your thoughts on this trade? And in general, the notion of buying puts at all on a $4.5 stock, sir?
Yeah, I think the premium paid relative to the stock, if it's a hedge, I don't like it. If it's more just a play on reversion and he wants to get a cheap way to get short, I still don't love it, but I like it better than a hedge. You'd be better off selling the stock and buying out of the money calls than buying these puts or buying a call spread. So not a huge fan.
I had a feeling you weren't going to like that one. If the Viceroy were still on the show, he would definitely take a dim view of those bad boys as well. I know he didn't like trading options on anything below $5, let alone $10, let alone buying puts to hedge something that's already $4.5. We may come back to these, we may not. We have a pretty dense schedule of trades to review, listeners. I don't know if this one gets me that excited. Pretty far out puts here in BBD, but maybe we'll see. Let's go on out now to another name. We haven't talked about this one in a little while here on the old show. This is COUPA Company, not Koopa Troopa. That'd be cool. COUPA, Global Technology Platform for Business Spend Management. There we go. Koopa Troopa. That's what I'm going to call them. Let's see. Ticker symbol COUP, C-O-U-P. It's a coup d'etat, which is French for coup d'etat. If you've seen Hop, you get that joke. All right. Let's go here before I distract myself with further silliness here. Stock right now trading $259.94, so right around $260, off about a little over $9, or about 3.5%. So rough day here for Koopa Troopa. A year ago, they were trading $177.25, and then they rallied pretty hard. This one actually got past June 8th. They rallied all the way up to September 1st. They got up to $344 and about a half. Then they sold it off pretty quick, got down to about $248. So they got annihilated pretty hard in the span of a couple of weeks here in early September. Then they rallied again by October 14th. They were trading $312 again, and then they gave up the ghost, and then they rallied again, and they did that a few times. Looks like they topped out on December 18th, $366.90. And actually, no, I take that back. They sold off again in early January, down to $296. Then they rallied again in February, up to about $369. Actually got as high as $377 at one point intraday, it seems like. Then they gave up the ghost again. This seems to be a recurring theme with some of these names here today. Sold off to $267, then they sold off again down to $242. So this thing has had quite the year. Upside, downside, all over the place. Difficult year, it sounds like, for a global technology platform for business spend management. Looks like last month and change has been hovering around this, $2.5 up to $270 level or so. But again, giving up some of the ghost out there today. So a rough year for a good, net it's up, but it hasn't exactly been an easy ride here for Koopa Troopa. Let's see what our Eye of Sauron found out here today. It looks like some puts. That doesn't surprise me. 5,083 to be precise, of the May 230. So these are about $30 out of the money, going up for $1.21 right on the bid. That's a 48 vol if you are interested, listeners. The stock was a little bit higher when these went up, 264.65. Let's see. The next earnings are on June 7th. So this is not an earnings play. So it seems like this is an old school line in the sand paper trade. Worth noting, our friends over there at Orats, they run some volume scans as well. Again, not as cool as our Eye of Sauron, but what is, I ask you? And they have Koopa Troopa here at number 6. They rank pretty much recent volume versus 20-day ADV. That's how they do their rankings. And Koopa Troopa to them is number 6, with about 2.5 times its ADV of 8,000. Actually, 8,000 today versus ADV of 3,400 over the last 20 days. And they also spotted these same May 230 puts. So, Mr. Rock Lobster, I should say Mr. Meatball, I apologize for besmirching you. This seems like kind of our old school name. Is kind of volatile. It's been bouncing around a little bit. Someone's taking advantage of that to draw a line in the sand, 30 handles below where it is right now, and getting a nice 48 vol, $1.21 to do so, sir. What are your thoughts on this one?
Yeah, it's not a bad little short-term yield play. Makes total sense to me if you want to own Koopa and, offices, people going back. Maybe that's not a bad level if you can get in at it. I don't know a ton about Koopa other than they're small turtles. But I do know that that is not a bad little play.
I think you know a lot about Koopa Troopas, though, do you not?
Yes, I know Koopa Troopas, and I know about the cartoon character King Koopa, who in the show in the game is called Bowser. But and I know that, and I know the Mario rap. That's really what it comes down to.
That's all you need to know in life. There's that old saying, everything you need to know in life you learned in kindergarten. There you go. Example of it right there. We can keep on rolling the odd block. We got looks like some longer term SEP calls in AMBEV. Looks like paper is probably maybe overriding these listeners. The AMBEV SEP 125 or 239 5,000 times. We can get into those, but I know it's Monday. Uncle Mike's champing at the bit to redeem himself. I know you folks got some questions. We got some audience polls as well. So let's keep on rolling. Let's unleash Uncle Mike. Let's see if he can go back 2 for 2 on his redemption tour as we head right on into the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, everybody, you know what time it is. It's time for Uncle Mike to spend the next, about 20 minutes or close to it, explaining to us why he thinks Demolition is a better tag team than the Road Warriors. Have at it, sir. If you want to throw the powers of pain in there as well, feel free.
Okay, but I do want to say this, though. You guys talked about Mario Brothers. Do you guys know what kind of pants he wore?
Didn't he have, like, overalls?
Denim, denim, denim. Denim, denim, denim.
Yeah.
Wow. Does that even qualify as a dad joke? That's some other category entirely.
Only people who played Mario Brothers back in the 80s or early 90s would understand what that one actually meant. But anyway, what I wanted to talk to you about today, speaking of the 80s, I was thinking is when my dad was telling me about investing, I remember when I was a young child in the 80s, he was telling me about these things called CDs, certificates of deposits, and the bank just hands you this money. And I remember him telling me about a CD that he got and that was paying 10% as an annual yield on it. And so I remember just being a kid thinking, well, so Dad, if you were putting $100, you only get $10 back? Oh, man, what a waste of time. Why would you even bother with that? Now, granted, I was thinking as a kid and the instant gratification that we all have in us, that didn't seem like a lot. But of course, today, that actually seems like just unthinkable for anything fixed income to have that kind of yield on it. I also remember the first ever savings account that I opened as a kid when I was going to deposit all my caddy money. I worked as a caddy as a kid. And I remember that was actually paying 5.5% on a passbook savings account. So we're obviously in a different era, to say the least. And so in the financial world, a lot of things that people are looking for right now is yield. And what's happening is a lot of times in the financial advisor world, people are being put into higher risk bonds. And a higher risk bond would be something along the lines of, like, say, a junk bond or a bond that probably is a little bit more of a risk than what you were originally looking for. There's anything that's rated below BBB is considered a high yield bond if you're a bond wholesaler. It's considered a junk bond for the rest of us, my opinion anyway. So with that being said, what the heck can you do in this marketplace? What can you actually do to have some type of a yield involved in the quote unquote boring section of your portfolio? And that's where I want to talk about something that I've been doing for a while. I've mentioned a few times before on the strategy block, and that's selling premium on bond underlyings. And so 3 of them that I look to at times are TLT, IEF, and LQD. And my compliance department doesn't allow me to tell you what I'm in at this point in time, but I am in at least one of those 3 in some way, shape, or form for my clients. But where I'm going with this is that if you want to own bonds, if you want to own U.S. government treasury that's a little bit more long-term, meaning 20-year duration or greater, then TLT will fit the bill with that. If you want to own a U.S. government treasury or a set of bonds that are U.S. government treasuries, 7 to 10 year yield or 7 to 10 year duration, IEF would be one. If you're looking to own corporate bonds, meaning bonds that are issued by corporations, then LQD would be something to consider. So with that being said, all 3 of those you can trade options on. So one thing that I want to mention is that in the mutual fund world, oftentimes you'll hear, well, 98% of all mutual funds don't beat the S&P 500. And I don't know what the percentage is off the top of my head, but that is typically true, quite honestly. And the reason is it's not necessarily the fund manager's fault. It's just because of the fact that they have such tight restrictions on them that it's difficult to beat the market when you have the restrictions on you that you actually have. Now, are there funds that actually beat the market? Yeah, absolutely, of course. But it's not the easiest thing to do with the restrictions that mutual fund managers have on them. So with that being said, you don't oftentimes hear, well, 98% of all bond fund managers can't beat AGG. And AGG is kind of another ETF that has a mix of a lot of different bonds in it. It's more of like a passive bond ETF, but you don't hear that quite as often. And the reason is that a lot of times there's been a lot more success in beating indices or beating benchmarks in the bond world than there has been in the stock world. So with that being said, what are some things with which you can actually do, being the active trader that we all want to be and love being, or at least if you're listening to the show, chances are you're somewhat of an active trader, or at least think about it, and still have something that's rather, and I'm doing the air quotes here, boring. Well, I would contend that perhaps selling premium on one of those three underlyings could be something to consider. And that if you're looking for corporate exposure, you can have LQD. You can sell some covered calls there. If you want government treasuries, whether it's shorter or longer term duration, you have that ability as well. And those are kind of my three that I look at and go to from time to time. Sometimes all of them, sometimes none of them. It just kind of depends on where I'm at with things. But with that being said, what I like about it is that, let's say that you want to buy the 10-year note. 10-year note right now is giving you a yield of roughly 1.6%. Woohoo! That's really exciting, isn't it? But let's say that you want to sell some covered calls on. Now, you could do this with 10-year note futures as well if you're on the future side of it and you have a little bit more money to work with on this, and you want to be a little bit more sophisticated on it. You can do this. But let's say that you want to trade options and you want to sell premium on like an IEF. You can definitely enhance your yield fairly significantly by being an active covered call trader. So you have that ability. Now, what is ultimately the risk in bonds in general? Well, of course, on the corporate side, there's default risk. And on the U.S. government treasury side, quite frankly, if we default U.S. government treasuries, well, the least of your worries is your mutual fund or is your IRA or your portfolio. Because if we're defaulting on our treasuries, then we got much bigger problems in our country than that. But with that, the main risk in bond investing is increasing interest rates. Now, let's say that we do have rising interest rates, which it's a topic for another show, but if we have that, then the value of the IEFs, the LQDs, the TLTs, the value itself will go down. And you need to be prepared for that. So let's say, I'm going to be really safe investing in U.S. government treasuries. Wait a minute, I thought this was supposed to be safe. I'm only getting 1%. Why is this thing down? Well, interest rates have come up, and there's more sellers than buyers of the bonds themselves. And that's something that needs to be addressed and dealt with if you're doing this. So on there, if you are selling premium against an underlying and you're being pretty diligent about doing it, oftentimes the covered call can act as kind of a Band-Aid if you have a paper cut. So with IEF as one example, it was at roughly 121 last May. Right now it's down around the 114 level. So with that, that's not a major, horrible, awful drop like a Tesla-sized drop or a tech stock-sized drop, but it's definitely something to be aware of. And so if you've been able to sell premium against it, you've mitigated a lot of that risk. Now, let's say it bottoms out, it kind of stays the same for a while. Well, you can still sell premium and you can create some pretty decent yield on it. Now, let's say all of a sudden, we have some type of a hyperinflation risk, and we're concerned about inflation, and all of a sudden you see all these bonds dropping 20 and 30%. I don't see that happening, but you never know. I could be wrong. I have been in the past. If that were the case, then one of the things that you can do with this, if you want to buy some type of 1-year garbage out of the money put, you can protect against that. Maybe not get the right the same amount of premium that you're collecting for maybe a month, And if you want to buy something that's fairly out of the money as a doomsday bond disaster put of some sort, you have the ability to do that. And quite frankly, as a money manager, I rest a lot easier, and I am doing that. I rest a lot easier knowing that not only do I have clients in something boring, I have them in something that is creating some type of yield, better than 1%. Now, granted, it's markets could be going down, so it in the bond world, so you might not be making a lot of money, but you're protecting yourself with all the yield that you're taking in from covered calls. But the thing that makes me most comfortable is that we have a put option in place for some of these clients. Not everything. I don't think puts are appropriate for everybody or in every specific situation, but I think it makes a lot of sense. I lived through watching LQD get the crap kicked out of it a little over a year ago when we had the initial COVID scare. And so, quite honestly, one thing that I've evolved to in this area of our portfolio, and it came back, it was fine, but if you have a put option in place and you have a scare like that, it's not so scary. So with that, that is my thought for the day on looking for yield in a very low yield environment, and Road Warriors for life.
All right, let's see if we can get some of your thoughts on really quickly here, a little bit of your... I almost said volatility voicemail. That would be the wrong show. A little bit of your mail block. There we go. There we go.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody. Really quickly, we got a fun new poll, new question of the week there for you live on our Twitter last week. You know, we had that really infamous one where you guys were all split across the board about which level we were going to hit first. Last week, you were all kind of unanimous, yet unfortunately wrong in what you were picking for Tesla. This time, we're going to test your Uncle Mike-ness. We're going to see how much optimism you really have in your heart of hearts, or really, if you have any, which product it's focused on. We gave you, right now, if you had to buy a 10% out of the money call in one of these four underlyings, that expires, by the way, at the end of the year, so on December 31st of this year, which one of these four underlyings would you buy that call on? Would it be VIX, so going for a little bit of upside and vol? Would it be the SPX? I don't care what flavor, the SPY, whatever you want to do, something in the SP 500. Would it be Bitcoin? Or would it be crude oil? I mean, again, I wish we could put more in there. Probably we could put ags, metals, a bunch of other fun stuff. Uncle Mike's beloved treasuries. All sorts of fun stuff. We had to limit it to four. So we kept it there. No single names, no Teslas, no Apples, no Amazons on the list. What are you guys feeling? It just went live before showtime. Right now, the S is winning with a nearly 40% of the vote, followed by a tie for number two between Bitcoin and crude oil. No love for upside in the vol space, only 5.6%. Maybe that will change again. It just went live. If you're listening after the fact, like I know a lot of you are, get on over at Options, make your voice heard out there. Speaking of making your voices heard, we got some folks in the live chat. Mr. Unlimited chiming in about our tag team discussion from earlier in the show. He said, tag team, exclamation point. So he got really excited that we invoked tag. Yes, kind of a lesser heralded portion of wrestling fandom, the tag teams, but I think they should get more love as well. He just says tag team, and then he says the Rock and Sock Connection is the best tag team. I'm not familiar with that. I'm going to guess from the name that it's The Rock and maybe Mankind, because didn't he have a puppet hand? Again, that's Attitude Era, not really my era. I kind of skipped out on that whole era. I went from like 80s and loving all that stuff into the early 90s. Then I kind of missed on a whole bunch. Then I came back when my little guy was of age and he dragged me right back into it. And I forgot how much I loved it. But yeah, I missed kind of that whole attitude. I guess Rock and Sock. I'm not familiar with them, but if you like them, more power to you. And then we've got regular here, my boy Luigi chiming in. He wants to know, I was wondering what would be the advantage to selling a straddle? Just seems to me like there is an unlimited risk of the call that would mitigate any advantage. Earning plays. So he's listening to our earnings straddle updates, wants to know why you would sell it. You're right. There is. People think of, you buy a straddle, you can make money in any market direction, right? But if you sell a straddle, you can lose money in any direction. And these days, it seems like a lot of the risk is to the upside. So if you are going to come out and do these straight up selling straddle type strategies, you probably want to do something to mitigate that risk, whether it's an iron fly, so you're buying a strangle outside of that straddle to kind of mitigate it, or you can go, if you're a little bit spooked about selling the at-the-money straddle itself, you can always go the iron condor route as well, right? It's a little bit removed from the at-the-money. Not quite as sexy from a premium harvesting perspective, but it's also a little bit insulated from shocks to the system. Or if you're going to sell the straddle, you're worried about the upside, you could always buy a call kicker against it as well. See a lot of people doing that. So kind of like a broken wing iron fly. If you're not as concerned about the downside, don't want to spend, or maybe you want to pick up the stock if it drops. That could be an issue too. You know, the old covered straddle is kind of an interesting way to go. People call it a lot of different things, but that's one way to go if you want to maybe get a little extra yield, but also don't mind picking up some more stock to the downside. That's some way that people go. And then they also will pick up a call to the upside just in case the worst comes to pass, like you put here. All right, we'll have to keep on rolling now. It is time for our final segment. We have to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, let's start with the greasies and meatballs. Mr. Meatball, A, do you have any thoughts on the risks of selling straddle, what you like to do to mitigate those risks? And then B, what are you keeping an eye on for the rest of this week until Thursday?
Yeah, the straddle selling does make sense if you have a margin account and you can delta hedge easily. If you're worried about straddle selling, the more retail-y approach is the short iron butterfly, which is very similar, but more risk control. And into next week, yeah, I'm watching VIX. What is going to happen with VIX futures? What's going to happen with VXX? Where is the S&P going? Because again, I'm getting a little bit of the heebie-jeebies here.
Getting the old heebie-jeebies. And yes, our old friend, the iron butterfly. What did our buddy Don say about that many years ago on Vol Views? The iron condor is an iron butterfly for cowards. I've always liked that expression out there. Mr. Uncle Mike, any thoughts about selling straddles yourself, A? And B, what are you keeping an eye on for the rest of this week?
Yeah, in terms of the straddle, old Auntie Mike, Mike Cavanaugh, one of the early hosts of this show from about 950 episodes ago, he actually had a strategy that he would sell a straddle at the money on the SPX, but he would have it totally covered with cash. So in other words, if whatever the SPX was worth, he would have that much money in the account and do a one lot on it. And so it was just kind of like a way of doing like a modified neutral covered call type of thing. And so he had some success with that for a few years. And so he called it his leapfrog strategy, to where if it would move enough, he'd sell another straddle. And he had enough cash to where it wasn't levered, and he made a decent return on it. It wasn't very exciting. I tried to leverage it with futures options. It didn't really work out so well, but I got out of it fairly quickly. And so eventually I worked into having a call or a put kicker on each side of it. And it just kind of didn't really work out. But I think there's something to it, but you just have to, you got to know what you're doing. You got to be by your computer a lot, and you have to have a plan on those unexpected days when the market doesn't move, or when it does move and you're not expecting it. So you got to be prepared for that. But in terms of levering naked options, that's something I really don't do that much of at all. Anyway, in terms of what I'm actually watching, SPX 4,200, seeing if we can pass that, and would love to make around the 4,300 mark. But if we don't, then I will go with Mark's heebie-jeebies and protect myself as well as I can.
Everyone's getting the heebie-jeebies on the show today. Unfortunately, that music means we're coming to the end of these heebie-jeebies, but you know what? Special treat for your listeners. You don't have to wait too long. If you're listening live, you're going to get crypto right after this. Had to rejigger some stuff in my schedule here, so I'm going to dive right into crypto right after this. But before we do that, let's go back around the horn. Let's start with the greasiest of meatballs. Mr. Meatball, if folks out there are getting the heebie-jeebies themselves, maybe they want to know what they should do. Where should they go? What should they do, sir?
Come to options.com. We're putting out great content all the time. Read our blogs and check everything out.
There you go. Check it out for yourselves. Mr. Uncle Mike, same question for you. With folks out there, maybe they're getting the heebie-jeebies. They want someone to hold these hands in these troubled markets. Where should they go? What should they do?
Hey, at stcharleswealth.com, we can help you cure the heebie-jeebies, the Hudson Klutzes, and hocus pocus all with one false swoop. And if you want to follow me on Twitter, at Mike TOSAW, today's strategy block will be written about in more detail and be shared at Mike TOSAW on Twitter.
There you go. Give him a follow at Mike TOSAW on the old Twitters. Get him past my personal account that I never really use. So get him up there at Mike TOSAW or St. Charles Wealth. Also the place to go. If you want more in your ear holes, you don't have to go anywhere. Just stay tuned. We'll be back in a couple of seconds with the Crypto Rundown. Back again tomorrow, of course, Interview Tuesday. I think we got another double dose going on for you tomorrow. So craziness afoot on Interview Tuesday. Wednesday, of course, double dose Education Wednesday. Boot Camp Options Playbook Radio. I think we put a dose of Options Playbook Radio in the boot camp last week, so we got a little bit of peanut butter in your chocolate. But you know what? It was a happy accident because a lot of folks on boot camp said, hey, I love this OPR stuff, and they liked it. So again, if you're not listening to the whole network, you're missing it out. But there you go. And on Thursday, we're back again with episode 2 of the Option Block.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.